Hey, I'm going to share with you something boring, but it will set you financially ahead of many other people and investors if you care to stay. Well, many investors, financial media, and the government, they use various financial indicators to predict where the economy is going. For example, the US government just released the latest numbers on employment for the month of October and November this morning. However, many of those indicators are trailing indicators. That means by the time you read about it, it's already too late. Is things already happening. There's one leading indicator that has been very accurate in predicting recession. It's called Sahm recession indicator. Sahm is created by Dr. Claudia Sahm, who was a former Federal Reserve economist. She pretty much take the most recent 3 months moving average of unemployment rate and subtracted by the lowest 3 month average in the preceding 12 months. And that would give a very good indication on the change, the significant difference. Historically, this rule has been very accurate in predicting economic cycle and recession. Since the 1950s and 1970s and all those recession, except a couple of false alarm, and has been very accurate. So take US markets right now, the triggers at 0.5, the US Sahm indicator is sitting at about 0.25, so it's rather neutral in terms of recession risk. Now for other country, it's slightly adjusted for its characteristic of the economy. So for Canada, the trigger is at about 0.65. Right now, we're sitting at about below 0.35, so slightly higher than above average. And for Australia, the trigger is at about 0.75, and right now it's about 0.35, so below average. And for Germany, trigger at about 0.5, right now sitting at about 0.25, so it's neutral. However, for the UK, the trigger is 0.55. Right now, the same indicator is at about 0.5, so red flag. So if we learn about it, understand it, and apply it, it would really give us the advantage over other investors and the market. By knowing what's probably going to happen, that would help us in making decisions in investing in our business finance, in our personal finance, so we can navigate away from dangers or potential risk and may even be able to capture opportunity ahead of the others. So if you want to learn more, find a like-minded investor group and learn from each other. Because, like, for example, in this case, the same rule was brought up by one of my investor group members in our weekly call. As I always said, we can go fast by going alone, but we can go much faster and farther by going as a group because we can learn and support each other. So if you want to learn more, stay tuned and join a Value Investor Group. Cheers!